insurance, automatic discrimination fairness. We will be talking about issues that lie at the intersection between market, social justice, and technology, asking questions about how to protect marginalized communities from the algorithmic discrimination, people of color, people experiencing poverty, people with disabilities, if our laws, anti-discrimination law, data protection, insurance law are effective and sufficient to tackle this problem, how we can build computer systems that are based on the principle of non-discrimination. So with those questions, we have a great panelist today who try to answer those questions and raise some, I think, insights and some thoughts. Our moderator today is Frederik Borgesius, sorry. My Dutch is not best, it's not perfect. He is a professor of law at Digital Security Group at Institute for Computing and Information Science at Radboud University. And he recently joined Radboud University. Congratulations. Then we have Toon Calders, who is a full professor at University of Antwerp. He's a machine learning researcher and one of the first researchers who was focusing on fairness-aware machine learning. He published several highly cited papers on this topic. Also a book that at least some of us well know, Discrimination, Privacy and Information Society, published by Springer. Then we have also Ursula Pachl from BEUC. She's the Deputy Director General of BEUC, and her current role is she's working on digital policies and coordinating digital policies at BEUC, Consumer Rights, Redress and Enforcement. BEUC is the main consumer rights organization in Europe. Then we have also Jos Schaffers from Dutch Association of Insurers. Jos is graduated in public administration and worked for the Dutch Association of Insurers over the past 10 years, and he also focused on privacy and data. And at the end, we have Freyja van der Boom. She's a PhD candidate at Bournemouth University and a research fellow at Weizenbaum Institute in Berlin. Her research focused on the legal and ethical aspects of big data in the context of connected cars and telematics insurance. Thank you.
Thank you very much, Jedrzej. Welcome, everybody. Thanks for coming to this panel among so much choice at this conference. We're doing a bit of an experimental setup, namely you won't get to see more slides, but we immediately dive into discussion among the panelists, and roughly halfway we'll invite you for reactions. This may lead to complete chaos, but then we hope that it will be entertaining chaos at least. Yeah, so big data and automated profiling in the insurance sector. Some questions, like privacy-related questions, resemble discussions about behavioral advertising or about large-scale data retention by secret services. But today we want to focus more on the typical problems that are in the insurance sector and not in other sectors. For instance, in the context of insurance, with big data you can segment in smaller and smaller segments the general audience, and you can estimate or try to predict that 5% of the most risky drivers, if you would charge them an insurance price that is logical, seeing the risk that they run into going to an accident. On the one point you can say that is fair, because why would safe drivers subsidize high risk drivers? On the other hand, the smallest segments of the most high risk drivers, for them insurance will become unaffordable. Which raises questions that you don't really see in most other sectors. And there's also some examples, anecdotal so far, but for instance, you can imagine that if an insurance company charges a higher premium in neighborhoods where there's more break-ins, more burglaries. In Holland, for instance, there is, as far as I know, there's like higher crime levels in poorer neighborhoods. So such a completely logical conclusion from a statistics viewpoint, like the neighborhood with higher risk of burglary, you pay a higher insurance premium, might lead to poor people paying more, or punishing the poor, basically. And it depends a bit on your political intuitions, but I'm always a bit uncomfortable with poor people paying higher prices. So we should have put on a whole day workshop, but we didn't. We have one panel. So that is one of the questions that we can discuss today. We'll do a few rounds among the panel, then we invite you for questions, but please remember them for now and perhaps think already how you can phrase your question even briefer. But we'll first go to Freyja. Freyja, any remarks on poor people paying more or on another topic that you think that we shouldn't forget in the context of big data and insurance?
Is this on? Yes, this is on. So my research focuses on the collection of data through increasingly autonomous and connected cars. So modern cars have... Can you hear me? I see somebody standing up.
I was trying to see you.
Oh, okay. Oh, okay. I'll scoop over a little bit. But you don't hear this voice coming out of the side. I'm interested to see what data is collected through the sensors in cars and what can be done with this data under the current legal framework, and then also what should be possible to be done with this data. So modern cars have sensors and that collect the data about how you drive, where you drive, when you drive. And this data is interesting for insurers to indeed classify your risk on getting into an accident, but they can also use this data, of course, to profile you and to see what your willingness to pay is, for example. So I'm trying to figure out where is this line between what data can be collected and for what, and how we justify potential adverse effects of using this to set your premium. I've been looking at the GDPR to see what kind of protection there is under the GDPR. So if you would object to the height of your premium and you want to know what kind of risk factors are going into this premium, you of course have the right to access and the right to information. There's also the right to data portability, and I'm trying to figure out to what extent can the insurer refuse these rights. Because they have claimed trade secrecy, for example, or they say that we do not want to give you access to the algorithm because people might game the system. So these are arguments that insurance companies are using. And then if you look at the principles under the GDPR, so transparency, fairness, to what extent can these help us to get more information about this whole process of setting risk, of giving you a premium, taking into consideration the consequences thereof. So I don't know if that's answering any questions, but at least that's a bit of an introduction of what I'm looking at.
Okay. Let's go to Jos.
Good afternoon. Jos Schaffers. I understood Frederik invited me to this panel because of my personal opinions, not because I work for the Dutch Insurance Association, which I do, but today I'll be expressing my own personal opinions, not necessarily those of our association. I also want to draw a line between life, non-life insurance and health insurance, because I know a bit about life and non-life insurance, quite a bit perhaps. I don't know that much about health insurance. So whatever I'm saying has to do with health, with life and non-life, not with health. And I started to get interested in this topic in 2016 when I was introduced to privacy and data as a new topic for me. I'm no privacy scholar, I'm not a lawyer. I graduated in public administration, as you heard. But in 2016, I actually wrote a paper on insurance and big data, going into the possible gains, but also looking at the possible risks of the huge... Can you hear me?
Yes. Yeah.
Okay. Looking at the possible risks. And there are, well, in the literature there are risks on privacy, on discrimination, on solidarity. And I think solidarity is one where insurance companies themselves really have a role to play. That's where we're different from other companies that also have to deal with privacy regulation, of course, and discrimination rules. But solidarity is really typically an issue for insurance companies. And I agree with the analysis Frederik already explained, how more data could lead to more segmentation, and how this could be could have adverse effects on, what do you call them?
High-risk drivers? Or?
High-risk drivers, poor people, what you have. So to see whether this is actually happening, or how the market dynamic actually plays out, I thought of the solidarity monitor in this paper. This was quite a shock, I think, to members. This was a proposal to yearly do a measurement of premiums for like 95,000 people that want to buy insurance. We selected 5 products. We asked a data company active in the insurance market to select 95,000 people that are possibly harder to insure. And we're going to check every year what these people have to pay. And by doing that, we can see whether premiums will actually start to diverge or whether they stay within a certain bandwidth, is the word, I think. Because what we don't want to happen is more data leading to uninsurables, to more uninsurables. That would be a poor outcome, I think.
Thank you. Is your impression that that your approach is a typical Dutch, or that in other countries in Europe, insurer associations take a similar approach?
No, I think this is unique for the moment. So perhaps, I don't know.
Interesting, thank you. This is it, by the way, the Solidarity Monitor in English. Did you publish it on your website already?
Yeah, we published the first version in 2017 and the second one last October in Dutch. And we published the English version actually this week. So you can all check it out if you like.
Thank you very much.
But let me say one thing. It's really hard to read because it's a lot of numbers and it's only 2 years. I think this is quite a long-term measurement.
Okay, but very good to hear that the insurers themselves are thinking through these problems. And I forgot the big data paper you guys published in 2016. Is it only in Dutch or also in English?
I can't remember actually.
No, me neither. Okay.
I think we did in English.
Oh yeah, okay. Then we move to Ursula. I can recommend that report, by the way, by the Dutch Insurance 2016 Big Data and Insurance title, something like that. Ursula, any thoughts?
Yes, thank you very much. So I speak on behalf of BEUC, the European Consumer Organization, and this is not my personal opinion, though it is a big correlation between my personal opinion and this one. So I'd just maybe say very generally the whole discussion about big data, data analytics, automated decision making, artificial intelligence, there are of course huge challenges in relation to avoiding discrimination of consumers. And that's something which we are very much worried about, seeing the overall development of our economies and of our markets and the position that consumers hold. Because we see that there is a very strong shift of powers because of these increased data knowledge elements that makes really that the enterprises have much more stronger positions. You know that the whole system of consumer protection traditionally lies on the idea of balancing of powers, of putting the consumer in a position where they can take out a fair deal from the market, where there is a fair kind of situation for them in the market. And so we see that this is very much something that we have to look at closely. That's just as an introduction. Now, consumers is very much, insurance, is very much at the forefront of this development for different reasons, also because I think they are really based on data in the sense that this is an immaterial product. They have a tradition of segmentation of the risk pool that they have. There is also the tradition of solidarity, which is something I come back to later. But if we look at the protections that we have at hand against discrimination, against undue, unfair, illegal discrimination, I would say first of all we have the classically protected elements. So that would be ethnic origin, that would be discrimination because of religion or beliefs, because of sexual orientation, whatever. So we have quite a solid body of European law. We have the European Charter of Fundamental Rights, we have the European treaties, we have quite a strong protection through secondary legislation. So I think there we have clear framing. But what I think is more of a difficulty now is to see how discrimination can be avoided and should maybe be avoided in relation to what I call economic discrimination. This is exactly your question, Frederik. Should you avoid that poor consumers have to pay more? Should you avoid that people have to pay more despite the fact that they have they're the same risk and they get the same coverage in terms of the product that they would have normally? So is there a reason to intervene? That means personalized pricing in a first instance. How does that develop and how do we deal with that? Just to give you an example, we had in the UK there was a kind of a scandal last year when price comparison websites for insurance products gave much higher prices to persons with a certain first name. So the example was a person who was named Muhammad had much higher premium as a result of the comparison than a person whose name was John. So that was something which was in the press. So these practices seem to be already in place. And then, of course, what we also see is an encouragement from the insurer's side for consumers, for example, in health insurance, in life insurance, to wear wearables, devices that monitor your physical activity, that monitor other things. So this is, as far as I understand, but Joe knows better, probably something that is just given as an encouragement, as an additional gadget. But we have seen discussions already that there may be a principle that is no wearables, no insurance, no health insurance, no life insurance. So what does that mean? I mean, to me, this sounds very similar to an ankle restraint for criminals that you have to wear, otherwise maybe you're excluded from a certain very important insurance product, or you have to pay significantly more. So what do we do with consumers who really don't want to be monitored? They have to price. So it's not only about poor or not poor, it's really also about dignity, about autonomy, about self-determination, and how that is affected by these type of products. Well, I think that's maybe all for the beginning. I just maybe want to say one last point, which is that with these new techniques, I think what is very important is that the discrimination will be much harder to identify. I mean, in the example that I gave with Mohammed, it's very clear, but there will be much more sophisticated ways, of course, to discriminate. And this is what leads us to believe that we really need specific rights and remedies, that we need to have certain obligations for those enterprises who use these practices for accountability of automated decision making, for traceability, for particular monitoring obligations, for data input, for data output monitoring, and of course for the enforcers to have specific access rights, because otherwise it will be very difficult to keep oversight, and for consumers to have specific rights. And that would be the right to contest, but we have to see the limits. I think that's a separate discussion of GDPR, Article 22. What does that really bring, and how are people protected? Is it really enough? I have strong doubts about that. Consumer law is super interesting in that respect, but maybe we can discuss this later. Principle of fairness in consumer law, what does it mean? Principle of fairness in data protection law, something probably underdeveloped, which maybe we should get out of the box. So there is a lot of interesting discussions. I stop here for the time being.
Thank you very much, Ursula. And yeah, like all of you guys point out, indeed here many different types of law interact, but also other disciplines like computer science. So we move to Professor Calders here. Toon. Yeah, take this.
Yeah, thank you. So I think the insurance domain is a very interesting domain with respect to fairness. And one of the reasons is because the better our models are becoming, the more reliably we're able to predict whether someone is at risk or not, the more this insurance principle becomes at peril, both from the sides of the insurance companies who do not want to give, well, preferably want to reduce the risk. So if they're certain that someone will get a certain disease, well, he's not interesting to insure. Also from the other side, if we know for sure that we are not going to get a disease, we will not get an insurance, and you will get this adverse selection. Apart from that, I want to go into the example that you gave about the poor people paying higher insurance. So there I think this is maybe not the best possible examples, because there I think from the insurance company there is a business necessity, if there is a higher risk, to give higher premium to those people. If we as a society think that that's not fair, I don't think it's also not fair to impose a rule on the insurance company that they need to be aware of this disparate impact. Then either we should sponsor them, or we should make sure that there are less burglaries in those neighborhoods, such that their risk is decreasing. This being said, I also think sometimes with the best intentions we want to reduce discrimination in models, but this may also have an adverse effect. For instance, if we notice discrimination is often the result of the fact that we cannot observe everything from people, and certain variables are correlated with sensitive variables, like the burglary risk that may be associated with people being poorer. So if we want to reverse that, if we are going to force insurance companies to build models that do not have this disparate impact, and so they treat people equally, the result of that will be that now John will be discriminated and will get a higher premium because he's John, and they want to reduce the disparate impact. And the only way to do it is to look at the sensitive attributes and give higher insurance premiums to the groups that receive the benefit. This being said, I think it's very important that awareness, that there is a rising awareness in the industry of these topics. Although I do not believe that fully automatic decision procedures by design are possible, and I fully agree that a definition of what is exactly discrimination, that this is absolutely not. It's not an easy notion to state. It's not easy to define.
Thank you very much. All very good remarks. Also good indeed that you point out, even if you assume that the poor are paying more, if that is a problem, it might not be perhaps it should not lead to the conclusion that insurance companies are the ones who solve that. Yeah.
So I didn't want to talk about health insurance, but in the Netherlands we have compulsory health insurance, and poor people get a premium subsidy by the state. So that's exactly where Toon's example comes into practice. So the company that has to lower the premium, it's the state that gives a subsidy.
Yeah, indeed. And as came up a few times, different legal systems interact, and many problems here feel intuitively like discrimination, like discriminating against the poor, for instance. But here I'm reminded of a Dutch case of the Dutch Human Rights Council. It's kind of the discrimination law version of a data protection authority. And there was a case in which health insurer asked advice about their automated system on their website where you could quickly take out insurance. And with health insurance, if you're expected to live longer, you pay a lower premium, right? Because you get an amount of money when you die. So if you're expected to live briefly, you pay more. Well, people put in their postal code, and in poorer neighborhoods, you are expected to die earlier. Sadly, in Holland, we're pretty progressively taxed, etc. And the poor people are not that poor in Holland, but still, poor people die years and years earlier than better educated, richer people. The difference is really shocking, and if you take enjoyment of life into account, the difference is even bigger, because poorer people have heavier physical work, etc. So the non-discrimination authority invited statistics professors, health professors, and they all said, well, sad as it is, indeed, if you want to predict how old people are going to be, income is the best predictor, and in Holland, income correlates very exact with postal codes on average, because Dutch postal codes are very narrow, small, like one street often, or one brief street, short street. In the end, so it hurt poor people. On top of that, it hurt disproportionately people with an immigrant background, from a Moroccan background and Turkish background in Holland. In the end, after really thorough analysis and expert opinions by statistics professors, etc., the non-discrimination body said, well, it is an important societal good to be able to quickly get an insurance. That is just practical. On top of that, we've asked experts, and there's no better way to predict how old people are going to be than their income. And we accept all that. And therefore, in this case, although it harms people with an immigrant background, we don't see a better solution, so it is allowed, this practice. And they also said, applying non-discrimination law, literally, we see that poor people are being discriminated against, but being poor is not a protected ground. It's not the classical list of sexual preference, skin color, etc. Well, they were applying existing law, so you could think perhaps there's a problem with the law. They cannot invent new laws, they're just applying existing non-discrimination law. If we feel sorry for such situations, we cannot just add financial status to the list of protected grounds, because then rich people start suing the state and say, I don't want to pay a higher proportion of taxes than poor people. That is unfair. So the easiest solution does not work. We cannot add financial status to the list of protected grounds. And now I talk too much as a moderator. I'm going to go back one more round of each of you can say. So you can say more about perhaps, should the law protect poor people against paying more? And then, as Toon says, should we push the responsibility to insurance companies, or should we subsidize? Or so you can react on that, or you can react on each other if one of your other panel members says something that you want to react on. So we'll do one more round of the panel, and then we'll take a handful of questions from the audience and move back to the panel. And we do that as often as we have time for. But first we go to Freyja.
Let's see. Yeah, I don't think I can say anything about whether or not we should, or if it's fair to have poor people say more. I think one of the consequences with the adoption of big data within insurance is indeed that it focuses on the notion of why we have insurance. So on the one hand, you have actuarial fairness. It's fair that you, for example, in the case of car insurance, that you pay for the risk that you pose, that you do not, as they say, subsidize for people who are worse drivers than you are, because this is something that you have control over. So I guess in a discussion about fairness, it's about discrimination, it's also really important to look at what kind of factors do you have control over and what do you not have control over. So I have control over the fact whether or not I drive through a red light. And that's, again, debatable, but I do not have perhaps control over the fact that my job requires me to drive late at night, or my job requires me to drive many kilometers. And then if the insurer uses this data, so driving late at night, driving in certain areas, if they use this to decide my premium, to what extent can I then say if this is being used, I am discriminated against because I do or do not have control over this. So if we see that the effects of that are that certain groups in society are indeed forced to pay a higher premium, this kind of touches upon whether or not we should decide insurance based on a social solidarity, or is it based on actuarial fairness. I think that's quite an important thing to discuss, and I don't know if we have laws that address that sufficiently at the moment, but it's a broader societal question. That was just something I wanted to add with this as well, and I'm going to give it to you.
Thank you. Jos, and could you also remind us briefly what the actuarial fairness means? Yeah?
Actuarial fairness. I thought you were going to ask about d'Azur. I'll come back to that later, perhaps. Now, the case Frederik mentioned, the insurance company discriminating or not discriminating on poor people. This was not about health, this was about a certain type of life insurance issued by the company d'Azur. I'm proud of them because in 2014 they had their model using zip codes, indeed, and they asked themselves, will this be unfair for people of certain backgrounds?
Yes,
and they themselves went to this Institute for Human Rights, explained, this is what we do. We wonder whether this is fair or not. Please help us. And they issued a 20 pages long report on this Zuiderveen case, where they reiterated that direct discrimination in the Netherlands is always forbidden. Indirect discrimination, so when you use a proxy that has results for certain groups, certain protected groups, indirect discrimination is also forbidden unless you have, I wrote this down, objective justification. And to see whether you have objective justification, they check whether there is a legitimate goal and whether the means are fitting, suitable, and necessary. Now, why do I tell you this? Because we're talking at a privacy conference today, but this is a practice that the Institute for Human Rights has ruled by for, I think, 20 or 30 years already in several insurance cases in the Netherlands at least. So this is a standard approach. And I think, of course, technology causes new problems, but I think the main lines, so differentiation on risk, causing indirect discrimination, being allowed in certain cases, I think the main lines are, well, quite clear.
Yes, correct. It's a traditional application of the principle of indirect discrimination. Yeah. So direct discrimination is saying white people get a discount, always prohibited. Indirect discrimination is indeed like a neutral measure which happens to hurt people with a protected ground, such as skin color or sexual preferences. And there, indeed, there's a nuanced proportionality test to see whether it is allowed or not.
And this is a difficult line, I think. That is true, to draw the exact line between differentiation allowed and discrimination. But insurance companies have been drawing this line for decades in the public eye, scrutinized by, well, for example, the Institute for Human Rights in the Netherlands.
So we could roughly draw two conclusions. Non-discrimination law is enough, and apparently it's morally okay if you escape non-discrimination law. Or sometimes with new technology, the conclusion must be we see unfair things happening and it escapes the law. Apparently we need rules. I'm still agnostic. I'm still confused myself. I don't know in what type of situation we find ourselves. Perhaps Ursula has opinion or wants to start a new topic.
I would very much also kind of support what Freyja has explained. I mean, this case that you described is a very interesting case, but it's not really, I think, related much to the new technologies, right? Because the postal code, I mean, you could have had it 100 years ago and you would have probably except maybe you would have not been able to justify that this is apparently a very reliable indicator for life expectancy, which surprises me, to be honest, because I'm a bit surprised because you could say, well, if we use that indicator, it will lead to a result which overall is societally not very desirable, because it will lead to a discrimination of immigrants, of those people who live in these districts. So maybe we take the decision that this should, because what is the alternative is that this is then not allowed to make this segmentation, so you have a bigger pool, and it's the solidarity principle again that comes in, and that would have to resolve the situation. But I mean, that has been decided by a certain equality committee, so that's hard to kind of criticize. But I think the risk now is much more that people are profiled, and then tariffs are targeted on elements that are not necessarily related to the actual risk that the insurer would face. I think this is a much more pertinent discussion in the sense what can be done with the new technologies and what does it lead to. But even the examples that we already have on the market, I just heard from our actually Dutch member organization, Consumentenbond, that they looked at these new products that is pay as you drive or pay as you live. So this is really behavioral tracking, and that then decides on the tariff that you are offered or not. They did a check of pay as you drive, and they found that for the average driver, it's not a very interesting tariff to have. Because it would maybe be interesting if you're really a higher risk, so if you're a very young driver, if you're an old driver, because you would have to pay more, then it could be interesting. On the other hand, for these ends of both spectrums, the tariff is not offered. So that was their result 1.5 years ago when they checked the tariff. So the question is also, is this really something that is useful for consumers? And is it maybe only price, is it profit optimization, which seems to be the case for this type of tariff? Otherwise, I wouldn't have an explanation. But maybe you can explain that. So the result of our checking of our member was this is not useful for consumers.
Thank you very much. Then we move to Toon. Toon, also, if you have to say something based on your own research on how, if you want to go there, is it possible to build non-discrimination or fairness norms into the data mining systems?
Well, it's definitely possible to define your loss function, the thing you want to optimize, in such a way that it also takes into account disparate impact. But then it highly depends on how do you define discrimination. There are very different ways, and they are also contradicting. For instance, say on one hand you have the disparate impact, how many people from one community versus the other community.
Yeah, could I say disparate impact is the US name for indirect discrimination, it's the same. But disparate impact is fine. Yeah.
Okay. And so if two communities are impacted in a different way, you could measure that and build that into your model building. But on the other hand, there is also another way to measure it. If you look at the mistakes that are made, are those mistakes balanced or not? Yeah. So it could be by enforcing that there is no indirect discrimination, and that actually you're building in imbalanced errors in predictions. So you're more likely to be predicted to be low risk if you're in one community than in the other community. So there are two different things, and that also makes it very hard to build it into decision procedures, and it's very case dependent. Which definition is the better one? Then also on what grounds can you discriminate? And there are of course the legal grounds that are relatively well defined. But then there are also these ethical grounds that we're discussing about. And there one distinction you very often see is features that you can influence versus features that you cannot influence. Like if you drink a lot, then okay, you should pay more for health insurance. It seems to make sense. But on the other hand, if you look at the example of life insurance, if I take life insurance at the age of 70, it's logical that I would pay more than when I take it at the age of 40. Women live longer than men on average, so it seems also logical that they pay less than men are pay. Because and that's again a question of the benefit. If you're paying for a less long time and you're receiving the same amount, and you have the same premium, you paid less to the insurance company, and so you have more benefit, or at least your relatives in the case of life insurance. So these are all things that need to be taken into account, and that makes it difficult. And that's why I think it's not possible to make like one fully automated model building software that does this by design.
Yeah, good point. As long as we don't know what as policy we want, which goal we want to reach, computer scientists can't solve it, because or they can, but then computer scientists choose the goal. Like we have to choose one type of fairness. So yeah. So, and the debate is only starting. All right. Any panel members burning to jump in again, or shall we take some audience questions?
If I may.
Yep.
Perhaps my fellow panelist, Mr. Calders, can help me with this. So one of the challenges, I think, within insurance, again, is that, okay, we know that we can't discriminate based on gender, but the fact is that we are collecting so much more data, and our analytics is getting much, much more accurate, that, for example, based on location data, it's really easy to identify your gender. So how do insurers show that they do not use these protected characteristics in their risk setting, in their premium setting? So that's one of the questions I think that we are faced with now. So it's just about what kind of data is collected, but also how is the data used, and how do we avoid that systems are being combined again.
Yeah, so there I think a multi-step procedure could help. And that first step could be that someone who feels disadvantaged, if he or she can show that there is a disparate impact, and so there is a difference in treatment between male and female, because, for instance, they're using location, then it's the insurance obligation to show that the characteristics that they're using that they make sense. Well, there were this number of characteristics that Jos was stating. So, and that they're proportional and fair. And then a third step could be that they also need to show that there is no other way to do it, there are no other characteristics to reach an equally good result. But then I think if they're using location and they cannot motivate this by locations that this person is visiting or more risky locations, and because there is more traffic there or more accidents there, well, then this could be reason to be convicted.
Yeah, and then there's a problem, of course, is if insurers are personalizing pricing, because then, I mean, it's easy if you have equal situations, but they can argue that no, it's not because of this characteristic, it's because something else, and which is pretty unique to your situation compared to somebody else. So how would we know that the outcome is discriminatory? I mean, I don't mean to put you on the spot here. Sorry.
I think nowadays a very important research direction in machine learning is explaining why decisions are made, and also counterfactual information that basically you're showing to the person who is labeled why he or she receives the label and what should change in order to change the label. And these could be things that are helping. One aspect that you didn't mention, but that's also important, I think, is about black box models nowadays. And that's not even, that becomes very hard to pinpoint what characteristic exactly made that someone was discriminated. Yeah.
Yeah, Ursula, let me go to the audience.
Because I think we come to a very important point here, because what I heard a lot is like, okay, if there is suspicion that there is discrimination or indirect discrimination, then, for example, the consumer can go to the insurer and say, look, I think there is something, can you explain that? Can you show, can you justify? But the average consumer will have no chance whatever to understand that there even might be an indirect discrimination. I think that's the starting point of where we have to look into this. And then normally the question would be, well, what is the level of mandatory transparency that insurers have to respect in these circumstances? And then I think we have to go through the different pieces of legislation that offer themselves. In relation to insurances, I think you would probably need something specific. We have consumer rights for contracts that would not include insurance contracts. I would say that we have to give the essential features of a product and service. Now, whether that would then include the indicators that are used for the categorization, I would doubt that. So the question is, do we have a legal basis to say there is a mandatory disclosure requirements for these elements that make up the categorization? Because I think GDPR would not necessarily apply here, because this is not your personal data, probably. It depends. So I think that would be a very interesting discussion, because what we have much too much is this whole discussion, and you use the word again, and there is some ethics, of course, that come in and where we need to take decisions. But I think these ethical considerations should rather be the ground for motivation of legal action or legal, new legal rules that probably have to come in. But we cannot leave it at the point to say, well, then there is some ethical considerations, because as we all know, that may be for some interesting and they will use it for some insurers, but others will just shrug their shoulders and go away.
Jos, very briefly, and then we go to the audience.
Yeah, regarding pricing, we already see that several regulators worldwide, in America and UK, are starting to look into personalized pricing. And then especially into the case, as Ursula mentioned, where people with the same risk still pay a different price. So I can understand that there is concern over this based on first name, or I heard email extension, so whether you're with Hotmail or Gmail or whatever. But again, these are existing regulators basing their work on existing laws. I don't know whether this states the case for new laws, additional laws. But I think everybody in insurance is currently looking at the FCA and how this will play out in the coming year. And there was one thing Ursula mentioned I wanted to react to. The pay-as-you-drive insurance in the Netherlands, whether or not this is something that is of interest to the market. I think if the Consumentenbond is right and it isn't interesting, then these companies aren't selling the product. And then probably the product will perish and leave the marketplace. I know in the UK and in Italy, this product is of interest to consumers because there they have, I believe, quite high premiums, and this is this helps consumers get a lower premium. And perhaps in the Netherlands, the premiums are already so low that this doesn't.
Okay, we're going to go to the audience. We're going to take 4 questions. No, I think 3 hands, 3 questions in a row. Please be 4. Please say who you are and where you work, if you don't mind. Briefly state your question. Briefly. We'll take them, and then we'll go back to the panels for reactions. 2 ladies here, 2 gentlemen at the left. We start at the right side.
Raise your hand again.
I guess the microphone isn't working or something? Okay, can you just say it really loudly? Aviva, really loudly?
It is a question, but mainly about the level of thinking from the machine learning side about fairness. There was an example of women living longer than men, and it'd be okay for them to pay more. I immediately had to think about a very famous paper of 1988 by Simon about the shitstorm in America, when it turned out that women pay more insurance for their pension because they live longer. But if you look at the causality of why people live longer, it turned out that they live healthier, take less risks, eat better. And to say simply that it is fair to look at these behavioral differences and then measure pricing according to this, and using that in machine learning worries me highly.
Okay, noted. Thank you for the new mic. Let's first to the right side. There's the lady there. And I'll repeat for the people who didn't hear the question. The point is basically, even if it's statistically true that women live longer, it is debatable whether you should use that as an input when, for instance, deciding on how much pension premium they have to pay. There are also counter-arguments possible, but panelists will return to that.
Hello, thank you for the presentations. My name is Jedrzej. I work for Insurance Europe. It is the European Insurance Federation. And I have a question regarding, I would like to build on the question addressed by the representative from BEUC, whether these innovative insurance products are actually useful for consumers. So I would like to raise the following point. Do you consider that increased availability of data maybe helps to fight discrimination because it renders insurers available to high-risk groups? And there are some examples regarding flood insurance where insurers, they had the possibility to suggest some measures to policyholders, to potential policyholders that they could take in order to insure their property. This was not possible before. What do you think regarding this particular point? Thank you.
Thank you very much. Yeah, Mike is coming there.
Hi, my name is Ansgar Kuhne from the University of Nottingham. My question is, to what extent So in many of the other industry sectors, what we've seen is that the incumbent, the traditional industry in that sector has been reluctant to move away from its traditional role relative to within society, and it's been external tech sector disruptors that have moved in to push the use of new technologies in ways that have been problematic. To what extent do we see something like that in the insurance sector? Are there external tech companies that also try to avoid being classified as an insurance company, trying to move in and maybe offer a very specific kind of insurance product that doesn't have to cover the whole population in that way, and use these technologies?
Very good questions, and they may not be members of existing associations, may not have thinking about solidarity in their tradition. Thank you. One more question, then we move back to the panel.
So one question, several questions. First of all,
very brief then.
The name of the panel is Big Data, and regarding this, how about detailing more about proxy data? Because when you do discrimination, if you with this conference, it's very nice because you have a lot of panels. In one of the panels, you had advertising inferences made for advertising, and you can get anything out of it. Okay, it's not okay to put on the table the label Muslim, gender, but you have a list. Whenever you ask for a company that processes data for advertising, you ask a list for what they have on you, they provide it. And you have gender with disproportionality or cost. So this is one question. The second question, how do you see put in place the fact that we all want as a consumer a personalized product, as long as, but the insurance model is based on a solidarity model. So I want a personalized product as long as it's cheaper than the solidarity around. And that's the second, and I will argue now, and I will ask if you change. I will ask if the business model of insurance is still valid in the context of big data, as long as we try to regulate how it can do business, but in the end, what actually it's all about is optimizing a profit function for the insurance, because in the end they will profile based on some statistics, they will profile somehow how many clients they will get, and then they will have at the end the accountant to draw the line and say this is the profit, and okay, we have another cost. No, maybe it's not a good business model anymore with this type of statistical approach. And lastly, do you heard of any...
The 3 questions, come on.
The one question, did you have anything about ensuring privacy?
Thank you. We go back to the panel in the traditional order again. Freyja, the first.
So many questions. To respond to the question of why women pay more, or well, within insurance, of course, they have to show why this information is relevant to the risk. So if statistics show that it is relevant, they can use it, except, of course, it falls under the characteristics of discrimination. So otherwise, if you can show that it is relevant, then you can use what they call material facts. Of course, the question is this fair? Yeah, that's another question to be had if we disagree with the results of that. Let me see if there was something else. So perhaps something about the business model of insurers. Of course, if we move towards risk-based pricing, only risk-based pricing, and that it gets better, so that our predictive analytics can say you will have that risk, that kind of makes insurance obsolete. So why would you pay just for the administration to have an insurance when you know what risk you are going to pose and how much it's going to cost? You can just put it on the bank and insure yourself in that sense. So in that way, they would make themselves obsolete. That's maybe some way that big data is influencing insurance. Whether or not that's going to happen, of course, you'll always have things that, I mean, it's a risk. It may or may not happen. So still, insurance will have a role to play. I don't know anything about insurance of privacy things, but maybe Jos has something to add to that.
Not to ensuring privacy, I'm sorry. I wouldn't know. But I think if there is more knowledge in the world, it follows logically that there is perhaps less risk. When we look at the self-driving cars, for example, you can see that, well, it could be, if they're made good, that they cause less collisions. So perhaps in 30 or 40 years, the risk of entering the road is lower. Then there is perhaps less to insure. Might also be that there are new risks that come up, like hacking cars, or the whole system colliding. So I think due to technology, risks may become lower, smaller, but on other places they might also grow. As long as we are speaking of risk, so it's not certainty, there is room, I think, for solidarity and for insurance. Like acts of God, a criminal wrecking my car, the insurer can know everything about where you drive, how late you drive, whether you're aggressive, whether you stop for red lights and grandma, but they can never know whether a criminal will wreck your car. So as long as there is uncertainty, I think there is room for risk, but perhaps less, perhaps somewhere else. And do we see big tech in insurance? Was another question, and this relates perhaps. I think in the Netherlands, up until now, not so much. We've had aggregators, like where you can consult what prices there are on the market for like over 20 years, but they're Dutch, they're homegrown. They're offsprings from insurance companies. We haven't seen Google or enter the market, but that is up until now. Perhaps this is due to our strict regulations in Europe. So perhaps this is a burden for companies. Perhaps this is also of some assistance. I don't know.
It's also possible that the online advertising bubble pops and that suddenly Facebook and Google move quicker into different markets. We move to Ursula.
Yeah, just something else maybe, because it made me think when you said automated driving and automated cars. So for me as a consumer, I ask, why should I pay an insurance for my car, but I don't drive actually, because it's not me who drives the car. So normally the insurance premiums would have to go down very, very strongly, no? I mean, maybe you can say something about that. I mean, what can consumers expect from that automation, in the sense of there is probably, at least if we believe what is said by the car industry about
yes.
automated cars, there is much less risk of accident, etc. So that would be interesting just to hear. There was a question directly to me, so I take that first, which was about maybe there is also some good results, like there may be more products available for high-risk consumers. Yes, maybe that is the case. I cannot judge the exact example that you gave, but I think looking at the risks and the opportunities is always important. Now, for the time being, I would say the risks are much more obvious, and we haven't seen exactly the products and services that are developed, but we have the whole risk of inclusion and exclusion, we have the privacy risks, we have the risk of much more segmentation. I just wanted to mention that EIOPA, which is the European Insurance and Occupational Pension Schemes Agency, so one of the three supervisory authorities, they are doing a very big report about big data in insurance. That should come out still in the first quarter of this year, so we're waiting for it. It will be very interesting. And the European supervisory authorities for all sectors, so banking, security and insurance, they have already published a very big report where they also give advice, best practices to financial companies, also to insurers. And they have said that it's too early to give clear ideas about potential need for regulation, just as a point of information.
Okay, yeah. So I want to go a bit more deeply in this personalized products. There was a question like, are they interesting, actually useful for the customer? And there I think the notion of adverse selection is very important, because people will only typically go for this product if they think it will be cheaper for them. So by doing that, you're actually giving the insurance company a very valuable variable Or do you think you will benefit from a system that monitors you more closely? And do you think yourself that you're a safe driver or not? So I think it will always come with this counterpart, and that if you're not giving your data, that you're suspicious. Yeah. And that's, I think, is a big privacy risk. Then about the big data, I think actually companies like Facebook and Google are probably interested in moving into these areas of insurance and giving credit to people. And there, I think there's a big risk because they have a lot of data about us, and there this will definitely start playing, that this solidarity principle will be hurt by the amount of information that they have on us. Yeah.
Thank you so much. Are there more questions? No, then I'll ask one more question myself. That's actually pretty good because we have only 15 minutes left. We'll do one more round among the panelists. Then I think it's really good that the topic came up of disrupting companies from different cultures with different backgrounds entering the market, because we hear some kind of comforting remarks from Schaffers, although he talked on a personal basis. But then anyway, even if we assume that in many European countries there's a tradition of insurance companies with kind of a civilized way of looking at markets and who feel the importance of solidarity, there's a possibility that indeed startups from other countries, other European countries, or from China or from Singapore or from Silicon Valley enter the market with a whole different way of thinking. It's not polite to name names, but I've had reactions from some colleagues, like legal academics, who saw papers or abstracts of mine and said, solidarity. Nobody in my country in the insurance sector thinks about solidarity. It's just a market where you make profit. Solidarity, that's, I don't know, if you want that, just for the government to arrange with unemployment benefits. Solidarity is not something for the market. So even within Europe there are already cultural differences, apparently. Yes, slightly more than 10 minutes left. So panel members, you can, you have like 2 minutes for final remarks, react on stuff that you heard earlier, or you could, I don't know, drop a topic that we should discuss next year.
Okay, so I've been doing some interviews with insurers, talking to experts in the field in the UK, and there is indeed discussion about whether or not they should offer these new products, so pay-as-you-drive, telematics, black box insurance, and they are closely watching each other. So, of course, they have a problem with trust. The public doesn't necessarily trust insurers that much, so they are a bit hesitant in adopting these kind of new products because, of course, they don't necessarily know what the impact is going to be. Are there disruptive companies in the market? Well, in the UK, but also in the Netherlands, there are indeed telematics providers, and they do state that their product is going to overtake the market in the next coming years, because, of course, having this kind of data, you can really personalize premiums, and that allows or gives them a competitive advantage, which other companies are now going to be able to compete with if they don't follow this as well. So you also do see that the big insurance companies are really watching what the smaller insurance companies are doing, and if it turns out that this is beneficial, they will either eat them up or also offer these kind of products. But right now they're quite hesitant still. That's kind of my...
Thank you so much. We move to Jos.
I think the first time I got the question whether big tech would move into the European insurance market was about 10 years ago. Up until now, it hasn't happened. And I'm from insurance. We project. And it might be, but I can't really say anything intelligent about this.
Okay, Ursula?
In general, I think obviously the risk is that if you follow this kind of trend that you individualize and you individualize the risk, and according to that risk you have an individualized price. In the end, we will be living in a society where companies decide how we drive, what we eat, how we live. I mean, this is the total commercialization of our lives. I mean, this is just a very important thing to realize, and I don't see another way of maybe even protecting consumers from themselves. Now, this is not an official BEUC position, this is my personal position, because there is indeed a tendency that people tend to say, well, if it's cheaper, I take it, and then I will see, maybe I can cheat a little bit here and there, and anyhow. But I think the question is really, do we want a society that works along these principles? And do we want to say, well, there is a restriction, certain types of insurance, we don't want to have this individualization, we just don't allow that certain indicators are used for risk profiling. I think this is the way forward. Thank you.
Thank you so much.
One question. Yeah. Sorry, this is the last question. Can you reflect, what could be a role for consumer rights organizations in tackling this problem and challenging or maybe even trying to find out what's going on? Do you think that the consumer rights group can be like the very active actor in this, in challenging this?
Yeah, that's a very good question. Thank you. I mean, first of all, we are already very active. My colleagues who work on financial services, they are in very systematic contact, for example, with EIOPA, with the agency, and I think they are doing quite a good job. Not my colleagues, the EIOPA does a very good job, and they have really anticipated many of these questions. I haven't seen, and I see a lot of policy areas, I haven't seen any other regulator who has gone into so much detail and make so much effort in anticipating market developments and anticipating potential detrimental developments for consumers. So I think that that's a very interesting thing. What we are looking at is, in particular, how can our members who are independent consumer organizations in the member states, how can they act as watchdogs of the markets, which they are now, because they're testing products, as I said, Consumentenbond looked at the tariff structure, looked at the functioning of this pay-as-you-drive, etc., etc. So how can we continue to do that in the future when there is a black box market, where you don't understand how the products are structured, how they are kind of how do they work and what are the impacts on consumers? Because with the individualization comes also the fact that you don't know what people pay. You don't know how they are, because it's not only about the premium, it's also about the fact if you have an incident, an insurance incident, how much is the settlement? And there may well be kind of algorithms that say, well, this is a consumer, it's a very stable, loyal consumer. If we pay lower settlement, he will not move away. And they will know exactly if you're somebody who might just be fed up and leave the company. You know, there is all of this, and it's very important, we think, that our members are still as independent market observers in a role to play that. But what we need for that is, of course, transparency, which we don't have. So I think we really need some legal framework to make sure that indicators are disclosed, not only if there is a suspicion, but right from the start, so that we can follow these tendencies and that we can act where needed.
Thank you. Toon, last thoughts?
Okay. Yeah, I just want to end with the position within the machine learning community, to sketch it a little bit, because there was some confusion about this age. Like from the machine learning community, we do not want to decide whether or not age can be used. That's not our position. It's, if you say we can use age, we will happily use it because it will make our predictions better. If we cannot use it, and then maybe through some other attributes we will still have access to age-related information, then you can tell us we can use it or we cannot use it. But I think there is a growing awareness in the machine learning community that even if we are not directly using these sensitive attributes, that there might be some effects still on these communities. Like, for instance, if you do face recognition, because there are more white people on the internet, recognizing white faces is easier than black faces, which may have an effect on other applications, etc., etc. These are things that we need to be aware of these unwanted effects of machine learning and artificial intelligence.
Thank you so much. Thanks again to the audience and to all the panel members. I forgot one important thing. I forgot to introduce our chair, namely Jedrzej Niklas, who wrote in English a very good report, co-authored a very good report on automated profiling in Poland, and a report on NGOs, human rights NGOs working on profiling. So a big hand to yourself and to all our panelists.